Hello, smart investors, beautiful people. I hope you're doing good. My name is Gabriel Jarrison. I'm from beautiful Paris, France. Today I'm going to talk about Jumpstart, raising money on Republic, whether or not it would be a good investment, whether or not it's interesting. I'm going to look at the investment on the website with my investment criteria list. Before we start, if it is your first time here, or if it's not your first time but you're not subscribed yet to my channel, I'd like to please invite you to hit the subscribe button. The button is right there, a big red button that says subscribe. This really helps me grow. This really encourages me. The channel is not that big, but as you can see, I'm publishing regularly, so it would be a huge help and encouragement if you could subscribe. You'll be able to get all my videos as soon as they go out. You can even add the little bell to get a notification. I'm publishing around twice a week, and you'll also be able to join the community of the smart investors. How lucky are you? Let's go. Okay, here I am on the Jumpstart's page on Republic. Before we start, a few things. First of all, this is not financial advice. I'm not your financial advisor. Please do your own research and take your own decisions. That's the first thing. Second of all, those are my investment criteria. If you do not know about them, you can actually download a document of, it's around 5 pages in the description where I explain what they mean, how I see those are just words, but how I actually see my vision in startup investing, about those terms, about those criteria. So you can download it for free. The link is in the description. Please download it. I mean, not please. If you want to understand what I'm saying, download it. It's completely free. You just have to give me your email. I won't spam you, I promise. And last but not least, if you want to invest with me in the best deals that I source and that I invest in my own money personally, you can actually back my syndicate on AngelList. The link is in the description. This is a no commitment at all for you. You just apply to back me. I'll accept you, obviously, and this will allow you to see the deals that I'm investing into. Those deals are private. If you don't back me on AngelList, you won't see them. It just allows you to see them, and then if you do want to invest with me, you'll be able to invest. So the link is in the description. Please consider backing me. With that being said, I'm going to look at Jumpstart. It's actually a request from someone on the channel. So if there's a company that you'd like me to look at, to analyze, to make a video about, please don't hesitate. You can comment below that video and ask me for it. I'll actually be really happy to talk about it. So Jumpstart is raising for 62 more days. They've raised so far $250,000, $254,000. It's 1,000% of their funding goal. So yeah, it's happening. Good for them. If you want to invest, republic.co, obviously. And I've looked at the video, and we'll see how I'm also kind of discovering the project with you so far. And that's it, let's go. So what I understood from the video and what I know about this project, it's an event-based insurance to help people recover from natural disaster. So Jumpstart, first of all, let me say, has a very huge positive social impact. So my investment criteria here do not measure social impact, because I'm really looking for revenue and deals that make money and really make us earn more money. That being said, it doesn't mean that I do not consider it. I actually really appreciate the mission. I think it's really awesome and important, and I think it's important for me to mention here. So if you want to actually, don't look at the metrics and the numbers and whatever, but just help a positive and impact investment, then you can definitely invest in Jumpstart. So I'm going to look at the numbers. The best investments are the ones that actually are able to make you money and have a potential positive impact. Let's look at Jumpstart. Let's see if they're part of that. But I just wanted to mention it. So they've raised $1 million in seed funding so far. They're addressing $100 billion global market, 20 billion in the US alone. They're targeting 4 million customers in 2023. 60% of growth is driven by customer referral. It's very, very viral. It's the first company offering parametric insurance for earthquake in the US. We'll see what parametric is. It's actually said here in the video. And the Domain Expert CEO co-founded 2 other quake-related organizations. Wow, that's pretty good. Pretty interesting. So the market is huge. We can see that immediately. It's really scalable because it's only an insurance product. We'll see about monetization, but they do know how to make money, which is good. We'll see about it in the description below. The market is huge. They have a huge growth. I mean, they have 60% of growth in customer referrals. So we'll see about the traction. I mean, the percentage of virality. The virality factor is pretty big, but that doesn't mean that they have thousands and thousands of customers. Maybe they have 12 and they're 60%. So we'll see about the traction in a minute. And of course, we'll talk about the team and the valuation. Stay tuned. All right. So the idea is very simple. When there's a disaster, mostly an earthquake, 57% of people can cope with a $500 emergency. Most people don't have savings. They have less than $1,000 in saving, 20 to 40%. That's a problem when there's an earthquake. You actually need money for whatever. Maybe your house is broken, or maybe you need to help someone else, or maybe you need transportation or whatever. And out of the 39 million Californians, only 1.1 million homeowners and renters have earthquake policies. Most people live without that insurance. All right, so they're protecting people with low-cost, no-hassle insurance, and it's called parametric. What this means is it's geographically triggered. So that it's triggered when they look at the data of the earthquake, they know that you're here. So immediately in 24 to 48 hours, they will wire you $10,000. So this is what Jumpstart does. They'll just wire you 10 grand. This is actually the money that you can invest here. Whether you need it or not, their philosophy is you'll need it for something. Here's the money. Do something useful with it, and that's it. So. Yeah, as I said, very interesting, very positive, very impact investing. So this is something to like, obviously. They have 60% virality. I'm waiting for numbers, obviously, but they had a strong launch and amazing feedback is what they say. Some people say it's a no-brainer, there's no catch, and that's really what it looks like. I really like the idea that they're just really willing to help people. There's a business model. All right, so let's talk about that because we don't know about the traction yet. We'll see maybe if it's down there. So we operate on an insurance brokerage business model. Customers pay their premiums to us. We retain 20 to 30% gross margin commission and remit the net premium to certain underwriters at Lloyd's. Lloyd's bears 100% of the responsibility to make post-disasters payout to customers. So basically, their income is out of the... you're going to pay a $20 per month to get that insurance, so that's $240 per year. Out of that, they're going to get a 30% margin, so that's 60. Let's see, 240 times 0.3. Yeah, 72. Up to 72, between 48 and 72 dollars. So they said $60 is their income, and that's basically it. All the insurance, the responsibility, the everything, like the insurance job is they're not doing the job of the insurer. The insurer is done by Lloyd's. So the monetization, first of all, they know how to make money. You pay for it every month, and the margins. I like margins that are greater than 50%. But here it's an intermediate model with little to no work. It's like a marketplace. So marketplaces can have lower commissions because they're going to have much bigger, larger customer base and more sales. So here it's not sales; it's recurring revenue, monthly revenue. The fact that it's also recurring makes for a great economics, even though the margins are only 20 to 30%. So the margin strategy, I think, is very good. Yeah, and that's it. So this is the economics. So it's actually an impact investment that is actually able to make money, and that's pretty good. Excuse me. All right. The market is big. We've seen it. There's not much competition. They're pretty much the only one to do that. 2 to 3 days for the payment speed, $10,000. They've raised more than $1 million to date. Okay, let's see. So first of all, they want to go for natural disasters and earthquake, but then they want to go for floods and tornadoes and outside of the US in 2021 and blah, blah, blah. This is the founder, and I'm not sure about the traction, the number of users. Let's look at users. There's nothing here that says users. I'm not sure. They say they have 60% growth driven by customer referral. Oh, there's 244 comments on that. Let's see if someone mentioned the users. Nobody? Really? Wow, that's insane. Okay. Let's see if someone mentioned the community. Oh, community resistance, development of a community. Yeah, okay. I'm not sure because I want to say there's a little bit of traction. It sure seems that way. They make it seem that way, but there's no actual number in terms of the number of people that have downloaded the app and that have started being insured. And usually when there's not much clarity, it means that they're kind of sort of hiding something, or maybe not hiding it, but they just don't want to disclose it, and that's kind of a problem, I guess. I clicked on the Yelp reviews to see how many people reviewed it. If it's thousands and thousands of people, then potentially there's a lot of 4 reviews, okay? And let's see on ClearSurance 5 reviews. So I'm not actually sure about the traction. Okay, I'm not sure. The thing is, it's such an, as they said, a no-brainer, and there's a huge virality. Even if right now they don't have a lot of customers, I'm pretty sure in the sad event, it's actually not great news except for their traction, but in the news that there is an earthquake and they get probably news coverage, the virality is so big that the traction could go could really start to increase dramatically. Right now we don't have numbers, and usually that means that they're bad. So the first thing on the traction is going to be negative, and then I'm going to add here after that a positive positive touch, because it could potentially go viral when there is an event, maybe an earthquake in California, something like that. All right, let's look at the team. Kate calls it her life's work to build resilience. She has 20 years of domain expertise in the science of risk and earthquake. She was named Insurance Innovators to Watch. She co-founded U.S. Resiliency Council and Global Earthquake Model Foundation. She's a licensed structural engineer in California. She's a registered disaster service worker, past president, blah, blah, blah. Oh my God, this is a never-ending resume. This is her profile here on LinkedIn. It's her first entrepreneurial project, but she's a civil engineer from Stanford. She looks awesome. Sadly, she's alone, and it is a big no-no for Leonis. When there's a single founder, and I can say that with confidence because I've been a solo founder and I've succeeded in a way, but it's so much harder. And it's something that we don't do. Kate is amazing by all standards, but she's alone, so that's gotta have to be a negative point here. Valuation is also tough because we don't have numbers. We don't know exactly. Annual premium return USD in millions, 2019, 0. Okay, so we don't know really. So it's kind of hard to talk about the valuation. Valuation is not really high anyway. It's under 7 million if you take into consideration the 10% discount. It's not big for something with such a huge potential. They already raised $1 million. Okay, we can. Okay. You know what? I'm gonna give them the benefit of the doubt, and also their mission is so good. I'm gonna say the valuation is okay. It's not great because I'm almost. They're almost starting from zero. But even for a company starting from zero, a $6 million valuation in California is not that huge. It's really a seed round, so I'm gonna say the valuation is okay. Let's talk about the unfair advantage. I do not think there's any patent. Let's see if someone talked about unfair advantage. No. What differentiates them from the competition? Well, they have the deal with Lloyd's. What is it? Lloyd's. Yeah, they have the deal with Lloyd's. So that's pretty good. But I'm guessing someone else can start another deal with another insurance, another insurer or bank. They have a small community that we don't know about. And they're the only one to do that today. But actually, if someone else wanted to do the same thing, seeing how viral it is, you could actually say that someone else who wanted to do the same thing, and instead of $10,000, they actually pay you $15,000 when you get a disaster, could actually take the market. So I don't think there's a real unfair advantage here. Yeah, that's about it. So this is my analysis of Jumpstart, guys. Please let me know in the description what you think. Are you going to invest or not? Did I miss something? If you want to know if I'm investing or not with my own money, you're free to join the private investment club. The link is in the description. In that club, I'll tell you whether or not I'm investing or not, and why. Just because there's some red dots here doesn't mean I'm not investing. And I didn't mention in the previous video, but sometimes it's all green and I'm not investing either. So either way, if you want to know my decision, join the private group. Please let me know in the comments what you think. Are you going to invest or not? Also, if you want to join my the best deals that I'm investing into that are not on the platforms, sometimes I'm investing on the platforms, but the best deals are outside. If you want to join me in those deals where I invest my own money, feel free to join my syndicate. The link is in the description. It's no commitment for you at all. And thank you very much for watching. If you like the video, give it a thumbs up. Don't forget to subscribe, and I'll talk to you very soon. Bye, everyone.